Hey, this is Sasha Evdokov, and welcome to episode number 116 of Let's Talk Stocks. And in this episode, I really want to look back at just some of the different stocks and the way that they performed in 2016 and some of the lessons that you could have learned from trading in 2016. Now, towards the end of this, I'll also share with you my biggest takeaway and the thing that I will be working on most within my trading as we approach 2017 and into the future. But I'll just share with you some of the big things and concepts that you could have learned from and just some key points as you got into trading or investing in 2016. Now, before we move forward, remember that everything that I share with you on screen here is just simply for educational and informational purposes because you might be watching this sometime in the future. And of course, your risk tolerance might be different than mine. So keep that in mind as we go through this lesson or share some stocks and insights throughout this video. Now, some quick news before we get into the lesson. Live classes schedule and the webinars are posted, so keep that in mind. And if you're on the newsletter list, we do have some free live classes scheduled for the newsletter subscribers. So if you go to the TRADERSFLY website, you hit the live classes right there at the top, and you scroll down, you'll see I started putting a little bit of a calendar here for you to give you some insights of when things will be released and also when we have the webinars and just some topics. Of course, you can share the stocks that you want me to review or look at as we get into these webinars as well. But if there's not enough stocks to look at, then we'll also do a quick little topic or just some insights on that topic. The other thing that's new and different is the packages for the video critical charts, which are the webinars that we are scheduling here throughout as we get into 2017, is also online and available. So again, if you go to the members page right there, you can see that for many people who are already members, there's a discount and promotional rate that will show up, and it will only show up if you've been a member for a certain period of time. And you can get this over the next couple of weeks here till January 9th and upgrade your membership, as I always like to contribute back to people that have been around or with me for quite some time. So that would be $29 a month. It's paid monthly. There's no annual membership simply because of the complexities now that we're getting into. It would just take a lot of work and trouble to code a lot of things in, depending on where people are with their membership. So if you want this, simply just log in and you'll see it right there on your page. If not, then our regular membership plans are just right there, $49 a month. That's what we're going to start it on because we're getting into video webinars and group classes. So the resources required are just much more resource intensive between uploading the videos, between holding the webinars, and there's a requirement on my time as well. So in either case, log in. If you're a member already, you should see this. And if you've been a member for a little while, most people will see this. So if you want to upgrade, this will be available for a while and you can lock in the rates for pretty much forever. Now, of course, if you just want to subscribe and keep the picture charts and stick to that subscription, you could, of course, just stay in that subscription and you don't have to change it or modify that at all. And then you would still just continue to get the picture charts. Now, one more thing, the Accelerate Your Stock Market Education version 2 course is available. So if you go to the Rise to Learn website, which is where we have all our courses, basically right there, normally you would just see this thumbnail and that's the course. It's a one video course. That's what it was originally. I've built it out, and as being part of the membership, as being part of continuing to expand further and sticking with me, if you still have access to the membership, which you should if you didn't cancel, refund, and so on, then what you can do is just log in and you will see version 2.0 right there. So I completely reworked it and it's there for you absolutely free if you have the older course. So by just logging in right there, you should see it right under your course page. And you can see that, just module 1 alone is 44 minutes, then 38 minutes for module 2, 50 minutes, an hour for module 4. It's a pretty good solid 8-hour course right there with a bonus module. It was reworked in more detail and getting more specific into broadening and accelerating your education in the stock market world. So in either case, again, if you have this course, just simply log in and you can get it absolutely free. It's included with your original purchase. If you don't have the course, well, right now you can still go to the Accelerate Your Stock Market Education, and you can buy this course. It still has a few of the old things up there, but we're slowly changing it out, and you can still get this, but pretty soon you'll only be able to get the new version and not the old version. So anyways, if you have this course, log in, get it absolutely free. That's just the way I like to do things. I like to contribute back as things expand. You get that course absolutely free. So just simply log in, hit the Watch Now button, and you'll see all those modules right there for you. All right, so let's take a look at some charts and see some of the takeaways that you could have learned from 2016. Now, of course, some of these takeaways are going to be different from other people. So you might see one chart and get a different takeaway from another person. That's because we're all at different levels. You're looking at things differently. You all see things differently, and maybe certain lessons apply to you and other lessons do not apply to you. So it's always important to look at what it is that you could take away to make yourself better for the next year. And I'll share with you my insight for me as we get towards the end of the video. But looking at lesson number 1 here, looking at the SPX, one of the big takeaways that you should really have gotten out of it was the big events, is looking at how things move during big events. And we had 2 of these things. Number 1, you had the Brexit over here at this price level. And then the second thing that you had was the election. So there was 2 major events really that happened, political-based events in 2016. That doesn't usually happen that often. I mean, there's still politics that happen throughout the world, but they don't happen that quickly and that strongly in one single year. And especially they don't impact the economics as majorly as these 2 events did. So if we look at Brexit here, that happened, I think June 23rd or so, and you look at the daily, you can see here how we had a major milestone or a major pullback in a big way. Things were really rocking sideways for a little bit, and we had a major pullback, and then after a little while you had that snapback. After a couple of days overshot to the downside, you had that snapback, and the same thing happened here with the Trump election right here. So you can see things were pulling back, and then you had the snapback. Remember, the market fools most of the people most of the time. And right here we had the same effect that happened, and everybody was saying, well, if Trump gets elected, in that case, you see a pullback, and there's still some concern over the next couple of years, obviously. So we'll see how things play out, because things right now are just based on euphoria, end of the year, profit taking, waiting to see about the tax implications. All these things are coming into the foreground here soon. Right now it's just emotional trading right here, especially this trading right there. But now things have to prove themselves. As you get into January with the earnings, now things really have to prove themselves. Same thing with the work. How is the new administration going to handle things? February, March, you'll start to see how those things start to play out. So in either case, that's one of the big takeaways, is that watching these big political events, you need to position yourself accordingly. And in 2016, we had 2 of them. The next major thing that you probably learned was that the Fed is quite scared. They're quite scared to do things, and many people in general are quite scared to do things. So when you look at the Federal Reserve, they're very cautious about raising rates. So they talked about raising rates, and they keep pushing it out up until you get a high probability of them actually raising rates, and then they finally do it. So, and that is because, remember, no matter who you're talking to, whether it's, the person on the other end who manages your investments to the Federal Reserve, they're always looking at themselves first. Then they're looking at their job, their family, and then potentially the economic side. So they have to do the appropriate things, number one, based on themselves and their job, because they don't want to lose their job either. So of course they want to do things accordingly and do them correctly, but they also don't want to disturb the economics behind it. So, and that goes the same thing with analysts. It's one of the same reasons why if you have an analyst saying, hey, let's just take Apple, for example, for conversational purposes, and we just look at it here on a weekly basis. If you have, let's say, one analyst saying, okay, this stock's going to 150. Another guy saying 160. Another guy saying 135 in the next year. Okay, so you have all these analysts talking about this, but one guy thinks it's going to sell off in a big way to 80. Well, he's not going to put down 80 because his job's on the line, because what if it doesn't go to 80? He might do something like 110 and be conservative, but still try to be in line with everybody else, because he doesn't want to be so far out of the box. And even if it does go to 80, at least he's in better shape. But in general, remember, they're looking at their job. And that's the same thing with the Federal Reserve. They're looking at their job. They don't want to sway the positions. And that's why looking at analysts, the same thing. You're looking at these numbers and figures. This is why a lot of times it's skewed to one direction or another. It's a group herd mentality. It's kind of what the market is all about. Okay, the other thing is dogs will be dogs. So looking at certain stocks like Groupon, let's see, Groupon. When you look at these stocks over 2016, this stock had trouble getting up above that $6 range. Couldn't do it. In 2016, it tried it, got back under, tried it, got back under, still couldn't do it, still hanging out. Stocks that are dogs, they'll probably continue to be dogs. I've talked about that with AMD for many years. This stock has been a dog. And finally, it's starting to break out and see some light. But in general, it's been under that $10 range for almost 6-7 years, and now it's finally breaking out of the $10 range. It's still nowhere near the $30, $40 range, but this could be a sympathy play for the Nvidia company, which is over accelerated in my opinion. You'll probably see a little pullback here would be healthy to the 96 level. But in either case, other things like Twitter right here, if you look at it, 2016, this stock, once it broke under the $21, $22 range, it struggled just to get above it. So it did for a short time, and boom, within 2 weeks, it was back under it. So dogs will be dogs. GoPro, same thing. Looking at this one, 2016, just moving sideways. And some of these stocks never get out of that darkness. They continue to stay cheap simply because they're there, they're underwater, there's no fuel, there's no juice, there's no momentum. So what's going to push them higher? So remember that typically once a stock is a dog, it's going to continue to be a dog. So here in this company right here, GoPro, it's been under there 2016. Notice how we had the sell-off, continues to stay that way. The next lesson comes with CMG, and that is because struggles last a while. So they've had some problems with their food, with the credibility behind their food, with the sicknesses, the illnesses, just a problem operating and running their restaurants with all the illnesses going on within the stores. And once this sell-off started to happen within the company right here, you can see it just struggled. And since 2016, we struggled to get above that 530 level. And it tried it once, and then it just continued to move lower and stayed low. And now we're hitting pretty much 375 on this stock as we close out the year. So between the beginning of the year at the 430, 440, and the 520, 530, and the initial sell-off over here at the 640, $700 level, which was a little before 2016, you can see that this stock is incredibly in trouble and struggling to build back their credibility. So this takes a long time to build, especially when you talk about consumer health and just overall consumer positive outlooks. So losing credibility is huge in the market, and once you do that, it takes a while to build. Another one that comes to my mind is Samsung. When you look at Samsung with the phones, there's probably going to be a handful of people that are just going to struggle buying a Samsung phone simply from the fire problems and explosions that they've had. So again, these companies that have struggles and problems, it takes a while for that credibility to continue to get back to where it was. All right, so the next lesson comes from just different sectors. So looking at things like a Bank of America or Goldman Sachs, or looking at steel over here, US Steel, is that things and momentums can change at any given time. So looking at 2016, especially here as we have US Steel, you can see in 2016 it pretty much bottomed out and made some extremely low lows, right under the $10 level. And then this stock slowly started to climb back, pull back, climb back, pull back. There was an ABCD pattern right there, by the way, in case you didn't see it. So there's our ABCD pattern. Rejected higher prices at that point, came back to retest some support levels, based a bit, and then again we accelerated due to the political effects. So basically when you look at this stock, again looking at it ABCD to the downside right there, has transformed after moving sideways into again powering and moving higher. Now again I believe we're a little too far extended, because as we start approaching this $40 price level, we're going to have to see some earnings and some other things coming into play. But as you look at things, and you start looking at the bigger picture, where was this stock before? Well, you can see it was in the 60s and even at the $160 level many years ago in 2009, 2008, right before we had the economic recession there. So again, looking at these things, look how much they've rotated. And if you look at Bank of America, the same thing, 2008, 2009, as we get deregulation and as these banks can do whatever they want, they'll probably, again, move over to the higher end. Will it be that high? Probably not. But remember, there's a reason why we go to history. There's a reason why we learn history or go to history class in school, is that things typically repeat. It's so we learn from our mistakes, but unfortunately human behavior doesn't always work out that way. So what will probably happen is, again, just like last time, in the past we've had recessions, in the past we've had depressions. So again, we will probably have another one coming up. How soon? Could be in 10 years, could be in 20 years, could be in 2 years. Nobody really knows the exact date, but as these things continue to power higher and they get into overextended price levels, you'll probably see it again move sideways and then eventually a pullback. It will happen. So again, now we're starting our stair step move to the upside. Okay, so as you can see, we're starting to break out and move to the upside. And this can last for years. If you, again, look at history, okay, so you can see some of the major pullbacks over here. When it comes to banking, again, things were a little different back then, obviously. Prices, inflation, all that was lower. But you can see you have major pullbacks right there. And then again, you had a good run, let's say from 1990 to 2000, so about a good 10 years. And then again, a major problem and pullback. And then again, a good run, and again, a major problem. So when you look at this, again, we're probably going to get a good run for maybe 5 to 10 years. It could be 5 to 10 years, I don't know. And then you might get another pullback, okay? That's just the way things work. But you can see that things are shifting and things shift, and that's the lesson to learn. And if you look at Goldman Sachs, the same thing will happen. As we get a run up to further extended prices, you'll more than likely get pullbacks as well in the future. JP Morgan, the same thing. We're far extended. Before, this stock wasn't moving as much, but now look at the acceleration because things have changed, just like with US Steel. Things are changing, things are rotating. They always do that from time to time. As things continue to change and evolve, you also have to change and evolve. So looking at these different lessons from 2016, there's a lot of different ones that you could have learned, and there's probably many more beyond just the ones that I've mentioned. But for time's sake, these are just some of the quick ones that you can go back and digest from for yourself personally. So what about me? What was my biggest takeaway or my biggest lesson, and what is the thing that I need to work on when it comes to my trading? Well, for me, looking back, it was actually the first initial lesson, is that when you have major events, especially political events that could shift one way or the other, the lightening up the positions would have been better for me. Now, I typically try to stay a little more balanced in those situations anyway, just like with the election right here. And then also as we get into Brexit right here, the number one lesson for me to learn between these two events was to lighten up my positions even more so, simply because, again, we always think that we are better than what we truly are. So even though my trading is pretty good and I like the consistency of it, I would still like to watch some of the things in areas and when we have major political risks, especially when things can go one way or the other, and more so when we know that they're coming. As far as federal interest rates rises and just general company earnings, I already typically know how those things will play out because we get them periodically and consistently. So those things I typically don't really worry too much about. But it's those big moments, such as Brexit or such as the political elections, which don't happen every single year, that I need to be a little more cautious of in the future. So probably next year there might be some other hiccups or things along the lines, but again, we're probably not going to get a major election next year, not at least in the US world. So that's my biggest takeaway and things to learn from. For you, I wonder what's yours. You have to really be honest with yourself as you start looking and trading and continue to evolve. Because if you're not honest with yourself, it's very difficult to evolve. If you always think you're the best, you'll just make up your earnings. If you're not honest with yourself, it's going to take a toll. And it's all really about seeing yourself from that outer perspective and continuing to improve. And you might have made just some little mistakes, but how is it that you improve those little mistakes and just continue to get better? It takes time. Do it step by step, and continue to work on it. This business is a business that you could do for the rest of your life. Even if you're making an extra $100 a week, $100 a month, it could just help ease the burden. So take those takeaways and learn from them and continue to improve and evolve as you get into 2017. Because once the clock switches, your life isn't going to change right away instantly. It's all about you doing the work and looking in the mirror and continuing to improve the actions that you've been doing over the past few weeks, over the past few months, or over the past few years. So I wish you a great 2017 ahead, and I hope it's very successful, prosperous, very joyous, and you enjoy the life that you have. And if you don't, then just continue to work at it, continue to improve. It takes time to build things. No matter what situation you're in, there's a lot of work ahead. There can always be much more work that you can do to make things better. Look inside yourself and see what's possible and what is it that you can do to continue to improve. And if you want to join me, then by all means, you can continue watching my lessons by just clicking one of the thumbnails over here, or join me on my newsletter list right here where I share with you some of those live classes that we talked about and mentioned earlier. Thanks again, and in the end, remember, do what you love, contribute to others, but most importantly, live life abundantly, and I hope to see you in 2017.